The S&P 500 as well as the Nasdaq are going quite parabolic today. S&P 500 up 2.38% at the time of recording this video, as well as the Nasdaq is up 3.5%. All of this rally comes based off of one quote from Fed Jerome Powell. He says, "Don't expect moves of today's size to be common. 50 basis points to 75 basis point hikes are likely at the next coming meeting." So essentially what the markets were looking forward to, or hopefully not looking forward to, was the Fed to confirm those 1% rate hikes if those are going to be coming into the future. And he did not. So that's when the markets took this big candle, and that's when you've seen that very, very bullish reaction. Now, a lot more was actually said, and we need to talk about, is this rally actually going to last? So we're going to dive into it. We're going to talk about our favorite stock here in this video as well. But in the meantime, hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Get your free stock with Webull, Mumu, and Public down below in the description, as well as come join the trading community if you guys want to be a part of that action. Link down below in the pinned comment and the description of this video. But let's talk about what Fed Jerome Powell said, some of these quotes that are coming out and hitting the news wire. So Powell says, if you're a young person looking to buy a home, you'll need a reset, and he means interest rates going up, so prices will eventually come down. Powell says need to get housing market supply demand balanced, says housing market is still very tight. And then he says FOMC not sure how much policy will affect housing market. FOMC is watching mortgage rates. He says market seems to be okay with QT, which QT is reducing the size of the balance sheet. That started on June 1st, but QT takes a while to actually go into effect and to actually see the effects of that. So I think it's really a immature comment to say, in the sense of we have not seen what policy is going to be affected by QT yet. We've never done QT, so I don't think you can logically say that the markets seem okay with QT. We really haven't seen what effect that will have as of yet. He says, we will look carefully at why inflation proved persistent. Said, this is an extraordinarily uncertain environment. Says, the federal funds rate somewhere in the 2s by the end of summer. He also says fluctuations in commodity prices could take the possibility of a softish landing out of our hands. Powell says, want rates at restrictive level of 3 to 3.5% by the end of the year. He says inflation is a very unpopular thing, painful for people. Powell says people don't like this inflation. We understand that. Yes, thank you, Fed Jerome Powell. It says the public's confidence in FOMC achieving price goal is critical. And there's a lot of other comments, and we're not going to read through all of them, but he was basically saying, and he was asked about a soft landing, if they still expect that, and if they have to actually see unemployment rates going up to get inflation to go down. And he said essentially that that would help a lot, but that's not what they're trying to do. They don't want to see people out of work. They don't want to see the economy getting bad, but it looks like a softish landing is off the table as of right now, and the Nasdaq down 30% for 2022 so far. I think that softish landing is really done. It's gone. You're not getting a softish landing. 30% down in 6 months is not soft, or it's not soft-ish. So they did say as well they do expect a 4.1% jobless rate by 2024, and that's really one that's kind of weird as well. I think the unemployment rate is going to be higher than that if you keep seeing companies coming out and laying off, like good old Elon, 10% of their workers, and a lot of other companies that are also starting to come out and do that as well. Now, if we look at CNBC and look at the main headline right here about the Fed rate hikes, it says Fed hikes its benchmark interest rate by 0.75 percentage points, the biggest increase since 1994. The Federal Reserve raised its benchmark interest rates 0.75 percentage point in its most aggressive hike since 1994. According to the dot plot of individual members' expectations, the Fed's benchmark rate will end the year at 3.4%, an upward revision of 1.5 percentage points from the March estimate. Officials also significantly cut their outlook for 2022 economic growth, now anticipating just a 1.7% gain in GDP, down from 2.8% for March. And that's what we've been talking about as well. The Fed in March expected growth of 2.8% GDP for 2022. Now they only expect a 1.7% gain. I don't know how the markets are going to take this. It's down 1.1%. In just 3 months. So it's definitely a very downward trajectory of growth expectations, but the markets are seeming to rally off of this. Now, I still think you're going to get more upside pressure from the bond rates overall. If we look at bonds, the yields have actually dropped 0.13 basis points as of right now since Fed Jerome Powell did come out, and that is what is giving us the boost to stocks today, and especially after this Fed meeting. But I don't really think this is something that's going to last over the next couple of days. I think the digestion of this Fed meeting is likely to be one that is pretty bearish, because the Fed is basically saying, hey guys, we're going into recession. We're going to continue to hike rates. There's no way the 10-year yield can stay at 3.34%. There's just absolutely no way that can happen. So you're going to see rates that go up off of the digestion of this, 50 basis points, 75 basis points back to back. It's just simply put, no way that rates can stay at 3.34%. And that's probably going to push some downside pressure onto the stock market like it typically does. But nonetheless, remember what happened the last Fed meeting. The markets, just like it, very similar to today, the markets after Fed Jerome Powell, they rallied about 3% to close out the day on the Nasdaq as well as the S&P 500, which the Nasdaq right now is almost at 3%. And then what happened the next day? Well, the markets dropped like 6%. It was not a good day at all in the markets. I believe this is the day right here. Markets were up 3.38%. This was May 4th, the day of the Fed meeting. And then what happened the next day on the Nasdaq? We ended up closing the day down 5%. So it looks eerily similar to something that we've seen back here in early May. I'm not a fortune teller. I don't know if that's going to happen, but I do think there is a lot of bad news that came out of this. Even Fed Jerome Powell was a bit shaky, and I know you're going to hear some people saying that. I think he was pretty nervous for this press conference just because of how negative and how much things have really changed since the last meeting. It's not a good thing. Just overall, it's not a good thing. But this is probably a shorts covering kind of rally, at least for now. But long story short, the Fed meeting today showed that if data changes, if the markets start to price in a more hawkish Fed or a more dovish Fed, that's what the Fed is going to do, no matter if you only have 2 or 3 days to digest that change, right? The CPI report came out on Friday. By Monday, the markets were expecting a 75 basis point rate hike. It went from a 3% probability of getting a 75 basis point rate hike to a 97% probability of getting a 75 basis point rate hike since Monday. Not last Monday, this Monday that just passed, ladies and gentlemen, 2 trading days ago. So it really shows that the Fed is being dangled on a string by market expectations. So the data that we get from this point forward is going to be very, very important. Now, we did get retail sales that came out today, which did show that for the month of May, retail sales were down 0.3%. We were expecting a 0.1% increase. It did show that more people are spending money at gas stations, but not spending as much money on other things. And that is what we've been highlighting here on this channel. That is what is going to push us into a recession, if not possibly a depression. Now, at the same time, the federal funds rate for July 27, 2022 is pricing in another 0.75% rate hike with a 94.2% probability of doing that. 50 basis point rate hike is pegged at about a 25.8% probability for that. So we'll see what happens with the rate hike probability. That's going to be probably the most important thing, because obviously the Fed is going to follow what the markets are pricing in and what the markets are expecting. But like I said, any other data point will be very, very important. And what do we have for data coming out tomorrow? We have housing starts for May, building permits for May, initial jobless claims, some other bond auctions, things like that. Nothing too crazy. And then on Friday, you have Fed Jerome Powell that speaks again, 7:30 in the morning. Industrial production year over year, industrial production month over month, manufacturing production, capacity utilization, and a couple other things. But overall, that is it. That is the big catalyst for this week. I would watch for that downside pressure potentially coming over the next couple of days. That is what happened at the last Fed meeting, and that is probably what we're going to see in the next coming days, just because we're seeing a 3% rally off of the Fed in the Nasdaq, and it was really bad what the Fed said. Like, it was not good. This was the first 75 basis point rate hike in like 40 years. So just keep that in mind. I wouldn't get too hell-bent on one direction or the other as of right now. It could go either way. The Nasdaq is down 30% year to date. After this move, I believe it's only down 29.29%, but given what we're currently faced with over the next coming months and potentially coming years with Fed policy, there's a long road to go, and I think there is potentially more downside left to go. Something else that I do want to point out as well is that hedge fund selling was never more furious than over the last 2 days. This article came out yesterday at 11 in the morning, and it does say that this is the highest level of selling we have seen since April 2008, when Goldman Sachs prime broker started to track that information, as well as the obviously the biggest dollar amount of selling that we have seen in a very long time, if not ever. But on top of that, hedge funds are getting shorts. Or the short sales are climbing aggressively. So I don't necessarily think we're all free and clear as of right now. We didn't really get anything that was like substantial enough to say, hey, you know, this situation's getting a lot better. We're in the clear. We didn't get that. So that's it. Now let's talk about our favorite stock, which is obviously Sofi stock, and it's really surprising, to be honest. Sofi is only up 0.25% now, down almost 0.25% here in after hours as the markets have now just closed, considering the bond yields have went down so much today. You can see bond yields on the 10-year Treasury note are down 0.17%, and that should help to bring down things like mortgage rates, auto loans, personal lines of credit, things like that. And that should have been seen as a little bit more of a bullish thing, in my personal opinion, for Sofi stock, but it didn't quite turn out to be that way. Obviously, because of the volatility that we are seeing in markets, that's what we should expect. Things, you know, that have happened, we can change trends, and that is kind of what happened today. Some stocks were up a lot, something like even AMC, like DraftKings, you know, these stocks were up quite substantially, or even something like Square was up a decent amount as well. Sofi will obviously get its day to shine, and I think that day is coming probably in 2023 when people have to start paying back their mortgages. Ortex is tripping out. Give me the short interest data. It does not want to, but the option activity extremely bearish for the day. You guys can see all of these puts coming through. Like in April 21st, 2023, $5 put for $13.7 million. Like, why would you do that? That's wild. Like, Sofi stock sitting at $6 per share is already down dramatically, and it's already beaten down into the floor. And the answer to why that is essentially is because there's a lot of long positions that are being initiated on Sofi stock, and to hedge out some of those long positions, it does make sense to go ahead and buy yourself some long dated puts, and that's what's happening. It's not really like a bet that Sofi is going to go out of business or anything like that. It's really a bet to hedge out a longer, larger bet that these hedge funds have. Now, we do have 16.78% short interest of free float, 122 million shares that are sold short. Cost of our max sitting at about 6.5%, 100% share utilization, days to cover sitting at almost 4. Free float out on loan sitting at 26%. So there is a lot of short-term negative pressure on Sofi stock as of right now, and that's obviously not a very surprising thing given the fears you're seeing in the overall economy as well as in the stock market. Now, you do have another insider buy from Anthony Noto as of June 13th. He did just buy another 46.5 thousand more shares for about $250,000. So another bullish thing you're seeing is a lot of insider buying activity. These are open market buys, and this is probably the single best thing you could see as an investor in SoFi stock, really in any stock at this point, you want to see insider buys, especially when these stocks are down 70, 80, 90, 95% in some cases. That is going to be a very, very bullish thing. Now for SoFi on a technical basis, the RSI is at 39.89, so extremely oversold. The MACD as well is also extremely bearish. So I do think you are primed for a rally if we do get that continued bullish effect in the markets. I'm not convinced, like I said here in this video, that is what is going to happen, but nonetheless, it is a very real possibility. So that is going to be all for this video. Hit that like button, subscribe to the channel, source comments, questions, or concerns down below in the comment section. Get your free stock down below in the description with Webull, Moomoo, and Public as well. You guys enjoy the rest of your day. I will see you in the next one.